everyone, and good afternoon. My name is Erica Donis. I am a Congressional Papers Archivist at the University of Vermont and the president of the Collections Care and Conservation Alliance. Thank you so much for joining us for this afternoon's webinar on collections insurance. The mission of the Collections Care and Conservation Alliance is to provide a network for conservation and preservation professionals to help improve collections care in terms of providing information and education, and helping with the preservation of art, artifacts, historical records, and other collections. Your attendance at today's webinar is a great illustration of how we bring together collections care professionals working in many different settings in organizations of various sizes and budgets. Joining us today, we have folks from historical societies, art museums, academic institutions, religious organizations, and more. So welcome to you all. CCCA has professional affiliate and emerging professional members from around the US. I invite you to visit our website to learn more about our member benefits and becoming a member. We offer multiple programs each year, including several webinars like this one. Including in the webinar registration today is the option to attend a follow-up virtual conversations with colleagues sessions with our speaker, which is designed to be an informal setting to pose additional questions that arise after today's webinar. The CWC event associated with this webinar will be held on Thursday, July 10th from 12 to 1 p.m. And now I'm going to turn things over to Darlene Bialowski to kick off today's program.
Hello, everyone, and thank you again, as Erica said, for joining us this afternoon. This is going to be an exciting webinar. It's something that's been in the making for a while, and we know that it is a top topic for those working in all kinds and all sizes of cultural heritage institutions. So let me kick us off with saying it is my sincere pleasure to introduce you to two of my favorite colleagues who work in the insurance industry. We have Adrienne Reid, who is Senior Vice President at Huntington T. Block Insurance and has been working in the fine art insurance industry for over 20 years. In her current role, she provides fine art insurance broker services for museums, universities, collections, and art shippers. She holds an MBA from Tulane University and is a certified insurance counselor. Adrienne is based in Houston, Texas. We also have joining us Carli Helfer, who has been with Huntington T. Block for 5 years as an accountant executive. She works with museums, historical societies, galleries, private collectors, artists, and conservators across the country. She has a BE in economics from Virginia Tech and is currently based in Washington, D.C. So I'm going to turn it over to my friends and have you start us off this afternoon.
Thank you so much, Darlene. We're so excited to be with you all today and can't wait to dive into this exhilarating topic. I'm going to turn it over to Carli, who will kick us off with the agenda.
Yeah, thank you, Adrienne. Thank you, Darlene. Again, thanks everyone for joining. We're excited to be here. Today, we're really just going to go over collections insurance. It's also known as fine art insurance. I want to talk about just the basics of it, some common definitions. And this is such a niche coverage. The goal here is to really shed some light on its workings and hopefully just make it overall something easier to understand. Quick overview of today's agenda. I'll give an introduction, just who we are here at Huntington Block. I'll then jump into the why, what, and how of insurance. So why insurance? Why is it important? What exactly is at risk? What is insurance? What is exactly fine art or collections insurance? That's where I'll discuss that coverage basics and some definitions. And then how to get insurance, what documentation is needed. We'll talk about how to determine a limit, and then just some important tips on communication with your broker. At the very end, we'll have some time for questions. So Huntington Block, it's the oldest and largest fine art insurance broker in the United States. It was founded by Mr. Huntington T. Block himself in 1962. HTB, we work with a wide variety of any kind of art institutions. This includes museums, both large and small, Historical societies, collectors, conservators, galleries, etc. This is nationwide. We aren't limited to any state. We can work with any of these institutions in any state. We have offices here in DC where we're headquartered. This is where I'm sitting today, and it's currently like 106 degrees. We also have offices in New York City and Houston where Adrienne is. We have our own in-house underwriting department, which really sets us apart. It just gives us quicker turnaround time to answer questions and get quotes out. We also have our own in-house claims department, which allows us to connect you with specialized art adjusters. So in the event of a claim, you're working with an adjuster that handles art or your collections, and they just know what they're talking about in those situations. And then HGB is also endorsed by the American Alliance of Museums and the American Institute for Conservation. AAM endorses our museum form and AIC endorses our conservators form. Today, I'll mainly just be speaking on our museum form.
Yeah, just to jump in, one of the unique things about Huntington Block is our proprietary museum form. So when Carli goes over the coverage basics, we are speaking about that Huntington T Block museum form, which has been the gold standard for museums across the world. So other institutions might have insurance through either a property carrier or another fine art underwriter or broker, which they would need to check the coverage on, but we really are speaking specifically to the museum form that Huntington T Block writes, and all of the carriers that we work with accept.
Thank you, Adrienne. Okay, so jumping into it, why insurance? What exactly is at risk? I have priceless objects here in the permanent collection. Priceless I have in quotation marks because it's one of the first things I hear anytime I speak to a new client. How do you put a price on something that you see as priceless? My response to this is yes, the intrinsic value may be priceless, but everything has a financial value, which is what we're looking to ensure here. What else is at risk? Pieces vital to your program. Have you thought about what would happen to pieces maybe that are damaged, that are important to your mission statement? Do you have items on loan from other institutions? Do you have long-term loans that are on display? Do you have short-term loans coming in and out? And then your reference library. Do you keep provenance records, inventory documentation, invoices, just any kind of records? And then this graph shows, I want to jump into it, the severity of risks that we see. So this is over the past 25 years. All objects have risk of loss or damage. To highlight the top 5 here, water is almost a third of what we see. This is, a pipe burst, a severe storm, rain comes through your roof, or just leaking from pipes. Fire is the next. Think about the California fires we saw earlier this year. Hurricanes, we're noticing that they're getting stronger and stronger. This is followed by theft and then transit. We'll touch on transit later on, but that's one of the most common types of claims we see. And then just a few other to point out. I mean, obviously there's a ton of different kinds of losses here. So handling, earth movement, that's earthquakes. We see a lot of mold claims, but this is just to give an example of some of the claims that we've seen. Now, 4 ways to address those risks we just saw. Avoid, reduce, accept, or transfer. Avoiding, it's not really an option. You can't 100% avoid any risk. Reduce, an example, you could put your collections in a safe or a bunker, but then that takes away, public access. It defeats the purpose. You can install, fire alarms, but if there's a fire, you're still liable for maybe like smoke damage, or how long does it take for the fire department to get there? You can't really reduce risk 100%. You can accept the risk, which is what we call as self-insure, which means you are liable for coming up with the funds to, pay for any of these damages. Or what we're talking about today, you can transfer this risk by buying commercial insurance. Quick definition on what exactly is insurance. It's just a contract. This is represented by the policy where your organization shifts this risk of financial losses to the insurance company, and that's by paying the premium. So then the company, if there is a covered loss, would step up to help covering expenses related to that loss. It just eliminates the need from you having to self-insure or pay for these things yourself. So why fine art or collections insurance? It's really specialized to your unique institution. It's really meant for collecting institutions. There is a very broad definition of fine art, which I'll also speak on later in this presentation. It includes automatic coverage for loans. So if you do have a loan program, those are grouped into this. And then I like to point out, especially for smaller institutions, normal commercial policies usually have fine art limitations. And those that can create a gap in the coverage, especially for your collections. And that's where the fine art insurance kind of steps up to fill in. So what exactly is fine art? I'm a visual person, so I like to include pictures of what exactly we're going to be talking about. Just some examples here. You're given paintings, historical documents, textiles. Do you have antique silverware? Even fossils or like natural history, natural science things. This can all be encompassed by this very broad definition. I will not read the entire thing to you, but I do want to point out that yes, it does immediately list what you would think of fine art, paintings, drawings, photographs. But look, rare books and manuscripts, antiques, natural history objects. The most important thing at the very bottom, and other bona fide works of art or rarity, historical value, or artistic merit. This is a really broad definition for that purpose. Whatever you have in your collection can be encompassed by this. So how is all of that fine art, your collection, covered? It's covered on a blanket basis under this museum policy, which means a schedule, a complete inventory checklist of your collection. It's not needed to quote coverage. It's not kept on file. So this blanket limit automatically covers everything in your collection at the locations on the policy. So just to visualize it, let's say we determine you want a limit of 500,000 at 123 Main Street. Whatever you have coming into that location, permanent collection or loans, automatically covered under that blanket limit. And then if you have multiple locations, each location is also covered up to that blanket limit. And then again, it's not required to secure coverage having that entire checklist, but it is really helpful in the event of a loss. God forbid something happens to 123 Main Street, it's gone. Adjusters would then need to see just documentation of what exactly you had in that collection. And it also helps in determining an appropriate limit. Again, I'll touch on that later, but like I said, it's not required to secure the coverage, but it is really good to have on hand and just refer to.
Yeah, I mean, to the extent that your institution can have a solid inventory, I mean, registrars and collection managers rejoice in documentation, and we do too, because it is important for the sake of just clarity to be able to have some documentation there. So definitely encourage it, but again, it's not a requirement for the coverage to have it placed. Maybe even, you can use it as a goalpost to continue to try to work to improve inventory records for the sake of insurance, of having that documentation.
Yeah, it's understandable that an institution might not have every single thing listed out, especially if you have an expansive collection, but it is just helpful if you start collecting that information. So whose property is covered under these policies? There's a few definitions. I'll mainly touch on the two biggest ones. That's property owned by the insured. That's you, your permanent collection, and then property of others. So lenders or owners for loans and exhibitions. Just to briefly touch on, gifts. If you have like a member of your community who wants to give you part of their collection or promises to give you a part of their collection, eventually down the line, that can be covered by this policy. And really, any property that's like of fine art or collectible nature that you've been instructed to cover, this policy can extend coverage to that.
I want to jump in on that comment about gifts. It may be a situation where a collector wants to promise a gift to the institution, and for tax purposes, will give it in stages over a course of years or something like that. Or that they want to give it to you, but they want to keep it at their house. And so we understand that. We work with many institutions that have that kind of arrangement. But just a pro tip on that, you don't want to ever have the museum responsible for ensuring something that's outside of your control. So, it's great if a donor wants to donate something, and they can insure it up until that point when it transfers to the institution. Just wanted to mention that because there are many different ways that people want to give, and that's great and generous, but we have to keep in mind how best to protect the museum in all circumstances.
Mhm. Okay, and then jumping into valuation, these are the exact definitions from the policy. So property owned by the insured, this is that permanent collection. This is higher of the price paid. If you are, purchasing items, you have invoices, it'll be higher of the invoice or current market value. And then property of others is the agreed value in the loan agreement. If this isn't available, it goes to current market value, but I really wouldn't suggest that. I would really emphasize we try to get that agreed value before you take in any of these items. God forbid there's a claim and it ends up that current market value is actually higher than your limits. You could be responsible for that. So I like to just say property of others, that's the agreed value in the loan agreement. Okay, and then the two types of loss, we have partial and total. Again, these are the exact definitions from the policy, but to quickly summarize, partial loss, the item is damaged but not totally destroyed. It can be fixed. The policy will also pay out any loss in value. Most of the claims we see are partial losses, but then we also have total loss, which is exactly what it sounds like. Can't fix it. It's completely destroyed. I also like to point out that a total loss can mean maybe if you're looking at the piece and it doesn't look totally destroyed, but it costs more to fix it than it is worth, that would also be deemed a total loss. But again, most of the time, they're just partial losses.
Yeah, and unfortunately, in the situation where there is a total loss that's paid out, like in this woodpecker attacked artwork, it actually gets transferred and surrendered to the insurance company as salvage or destroyed. You can't both get a total claim payout and keep the object. So insurers are not in the business of having art. they would rather not. But there are circumstances where they pay out a total loss and the salvage is surrendered to them. And then it's up to them what to do with that salvage. But it really is less of a frequency situation most of the time. Claims are paid out on a partial loss basis. And the important thing to consider in addition to the restoration costs is that it covers loss of value or depreciation. So that would be basically the difference between the value before the loss and the value after it's been repaired or restored. Recognizing that, it may not be perfectly repaired. And so there has been some residual loss in value there.
Okay, so these policies are what we call all risk policies. So think about that graphic we saw earlier. Any risk except for those explicitly excluded are covered under this policy. So the water, if there's fire, theft, you drop something, that's all covered. Keep in mind, the policy is designed to cover the sudden and unexpected. So to really understand that, let's take a look at the exact policy exclusions. These are listed in order on the policy. I like to read them from bottom up in terms of severity. So nuclear and war risks, it's a little severe. You can't really put a value on these types of risks. So these are excluded under the policy. Repairing, restoration, or retouching. Keep in mind, I said that's sudden and unexpected. So the intentional acts during treatment here, that would not be covered. Adrienne and I get a kick out of these repairing stories gone wrong. So this image here on the right, this is just an example. This piece was essentially damaged during the retouching process, so this would not be covered under the policy. And then wear and tear and gradual deterioration take place over time. The example I like to use is you have a painting on a wall for 20 years, you decide to take it to the conservator to get it cleaned. That's not covered. It's not sudden and unexpected. And then inherent vice, the best way I can describe this is through examples. So you have an ice sculpture, ice melts. You know, it breaks down from the inside. You can't really cover that. Another one is if copper patinas, that's just another example. And then I also wanted to mention that the fine art collection policies also offer terrorism coverage. So I know here I talked about war and nuclear. Terrorism coverage can just give the coverage if there's any loss or damage resulting from acts of terrorism as deemed by the government. It's an optional coverage for an additional premium. You can accept or reject this. I just like to mention it because if you do accept it, it's not a separate policy. It's added on to this fine art policy.
One thing to note is, I mean, this is timely because of, attacks on artworks to make political or social statements. Those are considered vandalism acts. Mm-hmm. So you can see that vandalism is not an exclusion that Carli went through. So that would be something that would be covered under the policy. Just wanted to make note of that.
No, that was a great point. Thank you, Adrienne. Deductibles, if you just want a quick definition, this is the amount you pay out of pocket before the insurance starts kicking in. On fine art policies, though, deductibles only apply to owned items on site, so not in transit, and they do not apply to property of others. We don't want to penalize lenders in the event of a claim. So speaking here of lenders of property of others, how do you insure incoming loans? So under the museum policy, coverage for these loans is automatic. You don't need to notify us, but please have that loan agreement on hand. It should be signed, finalized, and it should establish insurable interest. Who is it directing to cover the insurance? Insurance responsibility period. So the dates, what are the dates of the loan? And valuation. I've already said it, but I feel like I can't say it enough. It's in everyone's best interest to have that agreed value before you take in the object. And the value should be reasonable, preferably based on appraisals or invoices. And then I always like to stress this. If the value seems odd to you, you can absolutely push back and ask for documentation to confirm that value. Blame it on me, blame it on the underwriter. If someone tries to give you just an outlandish figure for something, maybe that doesn't seem right, you can always ask for documentation just to see where that comes from.
Yeah, I'd also like to throw in that some institutions have a habit of having long-term loan agreements, and I would caution against that. We really need to have a more finite term around any time that you have property of others in your control. So, if you have old loans, that the institution took in 20 years ago and there's been no updated documentation, that's something to try to get your hands around. Because if there is a situation where there's been a loan agreement, but the value hasn't been updated in years and years, the value that's on that loan agreement is the agreed value. And so, again, it's in the best interest and really the due diligence of the institution to make sure that you're redoing those loan agreements, you're renewing them, you're checking in with the collector or whomever to make sure that the values are right and everything's still the same. Because otherwise you can end up with situations, where people pass away and you have to find heirs, and it can be a real mess. So just wanted to bring that up as caution.
Okay, and then hand in hand with loans, I see requests for certificates of insurance every day. They can be requested for any reason. They're mainly requested by lenders for loans. These are essentially snapshots of the policy. So maybe the lender just wants proof of coverage. We can issue one of these for them. I'll need the dates of the loan, the total value, checklist of the items because they'll be specifically named on this certificate, and then the certificate holder's information. So that owner or lender, their name, usually their address I can add. But if all this information is in the loan agreement, you can just send that. That's what I like to say. I feel like it's easier. Just forward me a copy and I'll take care of it. Keep in mind, certificates can support the loan agreement, but the loan agreement is the legal contract that directs you to cover the artwork. So again, just really stressing the importance of having those filled out before you take in the pieces.
Yeah, when there is a claim, the loss adjuster would ask for a copy of the loan agreement. That's the document that they point to. They're not going to ask for the certificate of insurance. They want to see the loan agreement document.
Exactly. And then I wanted to throw in just a few terms that you'll probably see with fine art insurance. So Adrienne's already said this a few times, the care, custody, and control. When should you transfer risk away? Think about when is it appropriate for you to take on, the insurance responsibility. So some examples, incoming transits, you had no control on how those items were packed. You couldn't oversee the transit. So we wouldn't really recommend covering those. Policy can cover it, and I'll touch on that later, but it's a good idea to maybe not while at another institution. So if you have outgoing loans, if that institution is holding your item, they're in their care and something happens to it, this would affect your policy over something you didn't do. So I just like to say, think about when does it really make sense?
Yeah, you always want to preserve or protect the institution's loss ratio, loss record. So these are really, good tools to do that because to the extent that you can protect your loss ratio, that helps keep premiums low on an annualized basis.
Exactly. And then I had one more example here for what I would not suggest to cover. A lot of the smaller museums or historical societies that I work for, maybe they'll have like just a pop-up show in their facility and local artists will drive their own pieces to your location. I would not recommend covering that. I wouldn't cover those items until they physically arrive on site. Just to give you some perspective.
100%.
And then wall to wall, this is a big one we hear all the time. It's also known as nail to nail. And to put it simply, it's if you're borrowing a piece or if you're sending a piece out, the moment you take it off the wall in transit while it's at that other place and then back, it's covered. So the fine art policy is designed to completely it's a comprehensive coverage for this. There's no gaps. And the idea for the policy to have this, it's to make it easier on you. You don't need to notify us as long as it's all within the policy limits. This coverage is again automatic. Another definition here, we talk about condition reports a lot here at HTB. These are just documents that describe the current state or condition of that artwork, artifact, or collectible. Realistically, these really need to be done before and after each transit. The purpose of these is just to determine when damage could have occurred. So if you have the condition report before it's packed and the item is fine, and then it arrives and you open it up and look at it and you document, oh, there's a nick here, there's a tear here, then we can see that it was done in transit. I always like to recommend taking pictures. Those can be just as helpful. And then Adrienne likes to point out, you should also be doing these anytime that care, custody, and control is transferred. So again, who was watching the item like over here, whose insurance was this so under, and then if it switches to yours, we should be documenting before and after.
Yeah, I always point at an infamous case that I had with a client. The museum, they had a loan and they went to the lender's house to pick it up, and they did all the packing, they handled the shipment, brought it to the museum, and they did the condition report when it arrived at the museum. and they noted that there was some damage on the piece at that point. Well, the owner said that that damage was not there before. There was no documentation done at the lender's residence, so there was no proof showing one way or another, if that damage happened in that incoming transit or not. So, it could have been a situation where, had the documentation been there, the museum would not have had a claim because they would have already noted damage. But since they didn't do the documentation at the right time, they had to cover a loss that perhaps, maybe was something that had already been there. So, having documentation at the right points, in other words, when there's change in insurance responsibility, can really help you avoid those kind of circumstances.
A few more definitions here. Additional insureds and lost payees. These are usually just in respect to, again, those lenders and owners. An additional insured, this is just another entity who can receive coverage from your policy, and this should only be extended to those who have ownership or financial interest in the item. So my example here, like the lenders to an exhibition, if they own the items, they could be named additional insured. Lost payee, that's the person who would be paid in the event of a claim. So the policy automatically names owners and lenders as additional insured and lost payees. It's just to make it easier if the owner of the piece, if it was damaged, you're not paying the museum who then has to turn and pay them. It's just a direct payment. So how do you get insurance? With Huntington Block, it's just a few things. An application first and foremost, an exhibition schedule. If you have any kind of exhibition program, just like to take a look at that, what's coming in and out over the year. A facility report if you have one available, and then the top 10 highest valued items. So that is also asked on the application. I just like to point it out. These can also be really helpful in determining a limit. So if you have an idea of what your top 10 highest valued items are, maybe you can guesstimate the rest, and that can kind of help you come to a limit, which is the total amount that the insurance company will pay out in the event of a covered loss. These policies are on a per occurrence basis, so per accident or event. And I really try to stress, since these policies automatically include the permanent collection items on loan, that limit needs to encompass the value of both of those. And then we can always increase those limits as needed. So if you think there's a change in the permanent collection down the line, if you have a one-off high valued loan coming in, you're not locked into those annual limits. We can always tweak them around. And then again, documentation can be helpful when trying to figure out this limit.
And these limits should be really round numbers, because it's not a scheduled policy where, the exact values are listed, because there's no schedule attached. It really is a blanket coverage. So you want to kind of think of a round number that helps you for the rest of the year, which Carli will get into.
So again, I'm a visual person, so we have this graph that just kind of helps break it down. For example, the permanent collection, that's the blue portion of the graph. It's about 250,000 in this example. And then the loans, that's the purple part of the lines. So going back to that second sentence in the last slide, the limit needs to include the value of the permanent collection. And what I like to say is the average amount of loans at any given time. So for this museum, in this example, I would recommend a limit of 300,000. That's the closest that what we call the total insurable value is. It's just the total amount that could be paid out in a loss. So for this, I would recommend the 300,000. And then for December, January, and February, where the limit is actually 350, we could just bump the limit by that 50,000 for 3 months. So you're not paying for 350 the entire year.
Yeah, and the important thing to note is that loans are at the bottom of this graph. And the reason is because it's your obligation under, it's a legal contract if you have agreed to insure it. for property of others, then that's the bare minimum that that you need to have. Coverage for the rest of the permanent collection, that's up to the institution and their risk tolerance, but you at the very least have to have enough coverage for your loans.
And then just to touch on some other limits that are automatically included in our museum form, any other location, these are locations not scheduled to the policy, but are used for short-term exposures. So I have a few examples here. Say you host a pop-up exhibition at like a community center, that can fall under the any other location. Or if you're renovating your space, say you're getting the pipes replaced and you need to take the items out of that space and put it in storage for a little bit, that can also apply under the any other location. Just to give a time frame, I usually recommend this limit for exposure that's about 2 to 3 months. Anything longer, we can review just adding the location to the policy, and there's no charge for that. The policy also comes with a transit limit, which is exactly what it sounds like. For any one conveyance, this is any one boat, car, truck, plane. So the example is returning a loan, or maybe driving those pieces to and from the community center or to and from storage. And then I like to point out in our small museum program, these two limits are offered at the same limit as that premise location. So as your main location limit, it's just called block limits if all the limits are the same amount.
Yeah, a question that we get asked a lot is, can we just cover transit of an object? And underwriters will not do that. They will not just cover transit. You have to have a stay risk exposure attached to a transit. And so for us, we have built in these limits into our policies so that you have that flexibility of transit coverage. Alternatively, what can be done is buying transit insurance through the shipper, but that can be costly, depending on the shipment. So, it's best to have an annual policy that automatically gives you that coverage.
Okay, and shifting gears here a little bit, we were talking about just the logistics of the policy and definitions. I want to start talking about the policy in action. So this graph here shows claims we've seen over the past couple of years, the frequency versus the severity. So frequency literally means how often do we see these, and severity is really how expensive. So we'll start at the top, flood. You don't see it often, but when you do, it is very expensive. And then when you jump down to the bottom, loss while in transit, I tell all my clients transit is the most common cause of loss we see, and it can be just as expensive. The middle of the pack one that we see here, visitor damage. Have you guys seen the video going around of that guy that sat on the chair in the museum and damaged it? That's what would apply here. So, it happens kind of frequently, and it can usually pay out about the same amount. So not too much, not too little. And then I just like to point out, we're able to present this info because we have those in-house underwriters and claims department. So they're able to get this information, where we can review it and just see the statistics and just provide some advice and loss prevention tips.
Yeah, well, a really great insight on that was when because we insure about 1,000 museums across the United States, large and small. And particularly after COVID, we saw an uptick in visitor damage related to people like taking selfies and not being spatially aware. And then also we saw a lot of pipe break, water damage issues. And that we, really saw mostly because there was deferred maintenance that hadn't been done during COVID. And then the buildings kind of coming back online started having issues. So it's great to have this, data set to be able to pull these trends and what we're seeing in the museum space. The other thing I wanted to mention is that Carli talked about how frequent transit damage is, and that is very true. And one thing to note is that our policy doesn't have any restrictions as respects to the transit conveyance. So that could include you driving an object in your own car to another, institution or whatnot, up to having a fine art shipper or sending it, UPS. We in the art space really don't like, express shippers because most claims come from them. They are not equipped to handle art transit, but it is realistically something that we see quite frequently. But there is a lot of flexibility when it comes to that transit coverage, so that you can be rest assured that, if you needed to yourself, move something between, your offsite storage or the museum, the policy would cover damage to the objects en route.
And then we like to show this one as well. This is the catastrophic losses over time. This graph is adjusted for inflation. It's very clear there's an upward trend, especially in severe storms. You see the green line. The yellow line, that's tropical cyclone named or numbered storms. So hurricanes, for example, that's also on the upwards trend. And this is just the reality that these events are happening more frequently and can really drive the need for insurance up. So remember, this is this policy covers the sudden and unexpected. And that's kind of what this graph shows, is that this is on the up and up.
Yeah, I mean, I think it's important for institutions large and small to really think about climate resiliency. How is your institution looking at data like this? And, whereas maybe 5 years ago, the institution would say, oh, we would never have a flood, like we would never have this, really actually questioning that and being prepared for those events, because, emergency preparedness can go a long way in protecting your institution with really something that, is becoming increasingly more powerful and more frequent. As we're seeing the sort of change in the dynamics of nature. So I really encourage you to use this data to advocate for your institution, to be able to underscore the importance of emergency preparedness and disaster planning. And there's tons of resources that are available on that. So
Okay, and then switching over to just communication with your broker, we really want to emphasize you should feel comfortable speaking with your broker, and you should have an effective communication method with them. So your broker should be able to understand how this collection insurance works, advise on best practices, and just offer guidance on overall loss prevention. Your broker should not require that complete inventory to quote. Remember what I said up at the beginning of this, is it's understandable that an institution might not have full documentation, and then refer to the permanent collection as ordinary business property or commercial property. I'll touch on that here a little bit. There are some differences and there are some gaps caused by the commercial policies. So it's usually limited coverage for any high value items like fine art, or they might exclude it altogether. It might not be appropriate valuations. Maybe they value it at replacement value instead of that current market value. No loss of value coverage. That really is something specific to fine art collection policies. And then there's no wall-to-wall coverage. So again, there would be gaps if you're moving pieces from place to place. And just like to point out that this is what the fine art policy is intended for. And I meant to mention it earlier, but any other location and transit limits, that's pretty much what makes that wall-to-wall coverage possible.
Yeah, and just to kind of go back, the mentioning of a broker asking for values of things. Values are definitely very important from the standpoint of trying to find a limit that makes the most sense for your institution. And it might not be that, your highest valued item is the most important to the museum. And so really think about that in terms of, what objects are critical to the mission of the institution. That really, if those objects went away, how would that impact the, overall goal and mission of the institution? And what would you do? How would you go about either trying to replace it with something like kind or quality, repair it, or, pivot entirely? Because, we are insuring objects that are irreplaceable, right? By definition. And so insurance is really a tool to help you financially recover, from a damage or a loss. And, those values that are provided are a good, benchmark to help understand what limit makes sense. But ultimately, the question is, if you experienced a catastrophic loss, what would it take? What would you need to be able to get back to where you want to be, right? Just from your own, institution mission perspective.
Okay, so in conclusion, fine art insurance, it's very niche, but it really does have a broad coverage for institutions like yourselves. So fine art museum collections, any kind of collecting institution. It's designed to cover the sudden and unexpected. And as we saw, catastrophic losses are on the rise. And then just emphasizing, talking to your broker about the coverage, making sure the museum is properly insured. Insurance is a product you don't want to have to use, but I always like to say you would rather have it and not need it than need it and not have it. So with that, does anybody have any questions? I know this was probably a lot.
Ladies, before we jump into the Q&A, I just wanted to step in and say thank you ever so much for this presentation. As the three of us got together to start discussing what the CCCA, Collections Care and Conservation Alliance, and myself as a private practitioner have heard over the years, this is definitely a subject that many small museums and historical societies just are too intimidated to approach. They hear that the topic is so challenging, that it's rife with complications. They don't know who to turn to. They don't even know what questions to ask. So I
Looks like Darlene might have
Yeah.
frozen.
She'll come back.
Yeah.
We really appreciate the opportunity to help, because our goal really is to, disarm any false apprehensions, about this topic, and arm you with, knowledge so that you feel empowered to really advocate for your institution to get the right coverage. Because one of the things that I see is that, institutions think, oh my, we don't need, we can't afford, a specialized policy. But the reality is that it is not as expensive as you might expect. Fine art coverage from a rating perspective, at least in the insurance industry, it's much cheaper than a general property policy. So not only are you getting better coverage because it's much broader, but it's also more cost effective. So, really encourage you to, look into it and get quotes. And Darlene, I think she's back, so I'll turn it back to her.
Sorry, I'm in a very unstable environment. So yes, I wanted to just say that, for those of you who don't know me, I have been in the museum field for nearly 30 years. And my first job at a museum, the collection was covered under Huntington T block. So I have a very long history with understanding how they really understand from the very large institutions to the very small institutions. One other comment I wanted to make was Carli bringing up the term facility report. And I know those of you who are on the call who come from other institutions or who are at institutions that have their own facility reports. Those of you who don't know, that is a document that basically collects all of the information of your institution. And by that, I mean, and I happen to have been on the second revision of this back in the early 2000s. It was a document that was written by the Registrar's Committee within the American Association of Museums. back in the late 70s, because the big museums, they were starting to get professional and starting to borrow, and they were realizing they didn't know what the other one had and the information that was needed. So a standardized questionnaire was developed. And over time, that got to be a bigger and broader and more detailed report. So those of you who don't have a facility report for your institutions, may I suggest at least pulling together information you know about your building. Is it a total wood structure? When were additions done? When was the original building built? Maybe, include the current staff, include the emergency contacts that you have. Know where your fire hydrants are and their proximity to the building. Make sure every department or every individual has the contact information for emergencies. If you've had any kind of claims in the past, what are your collections? Are you basically just an archive with paper, or you are an archive with objects and all of that? And I think maybe next year the CCCA might be able to put together something to help guide you in at least putting that information together, because that is something that the insurance companies will want to know about, especially if there's a claim. They'll want to know, what your structure is, how updated are all of your mechanics, and do you have an elevator, and is it annually inspected? So all of those kinds of things come into that term facility report. So I am going to turn the baton over to Kelly now, because I know there must be lots of questions out there. Thank you again.
Thank you, Carli. Just to piggyback on that, a facility report is not required for a quote, but it is definitely, a good exercise to go through, like Darlene mentioned, if only just to collect and gather information for your own edification. But our application form is only 2 pages. It really just focuses in on the, core components that underwriters want to know, which is construction, fire protection, security. And but facility report is a robust document, that can help the institution overall. So yes, do encourage it.
Okay, so I want to welcome everyone to ask their questions in the chat. I'm just going to go through a few of them. So let's see. Monty says, my archives will be taking ownership of 10 major collections over the next 6 months. Can we insure these collections during the period in which they're being transported to our archives?
So yes, that goes back to property of others, or maybe the items that you're taking in as gifts, if they're promised gifts. The policy can extend coverage. Just make sure you have a contract, just documentation in place that states that you are going to be covering them in transit to you. So I think you're talking about, like, while it's picked up and then en route to you, yes, the policy can extend coverage to that.
Yeah, an important point on that is make sure that in the ownership documents, it clearly specifies when the transfer of ownership happens.
Mhm.
Are you taking ownership upon retrieval or upon arrival at your institution, right? Because that, if it's upon retrieval, then while the objects are in transit, it's yours, right? Versus if it's the transfer of ownership doesn't happen until it's at your institution, then that period of time would be when you're transporting other people's property. So important distinction, just making sure, documentation is straightforward and clear on the ownership transfer.
Okay. Jack asks, we have 2 permanent locations. Do we need a separate policy for each?
No, the policy can take multiple locations, and then that, what I was talking about, the blanket limit, can apply to each location individually. There's no charge to add location. So say you take out a policy and a few months down the line, you get a second location, you build a second location, we can add that, no problem. Just make sure you let your broker know, though, that you have those multiple locations, just to make sure that's addressed on the policy.
All right. And Jane would like to know, could you provide examples of limits for transit?
Yep. So in the small museum program, I mentioned that the transit and that any other location limit are block limits. So to give an example, say we decided that that ABC Museum wants 300,000 at their one location, their premise at 123 Main Street. The transit in any other location would also be 300,000 each. So you would have transit up to 300,000. I want to point out, I think I skipped over this in the presentation. If we do need to increase for a larger incoming loan and we need to increase that transit limit as well, depending on the value of it, underwriters might require fine art shippers. So usually if we're seeing like a substantial transit increase, that's when they'll start asking that information.
Okay, our next question is, how do you lower a deductible?
So 1,000 is standard. Truthfully, I don't really see anybody ask for lower deductibles. It is a really low deductible for what it is, and it only applies to the permanent collection while on site, not in transit, and it does not apply to property of others. I don't know, Adrienne, do you have any insights on that?
And you can get lower deductible options quoted, and that's something you can ask your broker. But the premium savings or difference on it is really small. It makes it really kind of not worth it because the underwriters know that the deductible on the policy only applies to permanent collection on premises, and the majority of claims that come in are to property of others or objects in transit, and so which have no deductible. So really, the deductible doesn't have a huge impact on, the level of risk that the underwriters are taking on, and thereby, how much premium they need to charge. But I would encourage you, if that's something that, for the purposes of your institution's board or president or whatever, to be able to see some options and have them choose, and talk it out. By all means, ask for options and find the deductible that's right for you.
Elizabeth asks, can you provide a ballpark range per $1,000 or collection value?
So the minimum premium for our small museum program is 1,000. That covers up to about 300,000 in limits. And then it just goes up incrementally from there. But I would just say the minimum premium is 1,000.
So, I mean, that's exactly right. And that's an annual premium. So that can give you a idea of the ballpark per $1,000. I think, a lot of our institutions fall under, the minimum premium range, and then, it goes up from there.
Okay, and Erica wanted to know, did I hear you correctly that an institutional fine art policy can cover losses that occur during transport in a private vehicle by an employee? Realistically speaking, that's a primary method of transport for many of us.
Yes, so there's no exclusion on the policy for transporting in your own vehicle. There is, I point this out a lot, there is a clause in the policy that basically says if you are going to be transporting the item yourself, you have to make sure it's packed competently and in a way to withstand normal road hazards. I have seen people just throw statues in the back of a U-Haul and take off. That's not covered. It wasn't strapped down, it just falls right over. So yes, that can be covered. Just make sure you're, taking care of it and packaging it safely.
I have a really bad example that's fun. We had an art dealer one time who put a painting in the back of his convertible and was driving on the highway, and the painting flew out the back. And so he, circled around to get back to where it had flown out of his convertible. And by the time he had circled around, somebody had picked up the painting and stolen it. So, yeah, we want you to, pack things appropriately to handle the normal hazards of transit, and just for your own, protection. If it is something high value, have a buddy with you, just in case something happens with your vehicle on the side of the road. That's just a good best practice to have. But yeah, so you can absolutely transport objects in your cars.
All right, good to know, and thanks for that cautionary tale. I want to welcome anyone else to put questions they might have into our chat.
There was a question about a model loan agreement form, and I would love if we did have one. And that's been something of a topic of discussion for decades, and I think Darlene could attest to that. But the reality is that institutions have their own frameworks and their own legal counsel, and so they tend to want to have their handle on it. We definitely review loan agreements day in and day out all the time, and we're looking at the insurance clause, and an insurance clause can be 2 sentences or it can be 2 pages, depending on an institution or a lender or a borrower. But in all cases, what you want to make sure is that the insurance language and responsibility align with your insurance policy, such that you are only responsible for covering, providing loss or damage to the extent that it is insured under your policy. So if you have that alignment, then you're good, because your insurance policy will cover what it'll cover, and if it's a loss that's not covered, then you're not responsible. It's really, really important to check that on your loan agreements and make sure that you're not agreeing to something that's above and beyond what your policy will cover. But we don't have a model loan agreement, I guess, is the bottom line. And while we can provide recommendations on loan agreements, we are not legal counsel. We are not lawyers. We are only, providing guidance as it relates to, how it dovetails with your insurance policy.
Our next question is, what would happen if an item is insured and as a partial loss is restored, but it loses valuation through the restoration process?
That's a great question. Carli, you want to take it, or?
Might need a little backup, but from my understanding, it would still be covered. That exclusion for restoration does not apply if it's under the direction of a claim. So if that happened during the claims process and that restoration was approved by the adjuster and the carrier, that would be covered. Is that right, Adrienne?
Spot on, yeah. And that's why it's important to go ahead and file a claim. Even if you think maybe you'll just fix it yourself, because you want to have that, that blessing of the insurance company on the process. And then if it doesn't work out, or if it's a loan situation, and they're not happy, it's far better to, have already had this in the works with the insurance company, rather than, trying to fix it and take care of it, and then all of a sudden it becomes this big thing and you have to go back to the insurance company. So, I'm a fan of, treat your broker as your confidant, and, be, open with all of the information that you can provide, and not be afraid of, letting them know of damages that happen, so that they are notified and on record about it. And it'll save you a headache later if something comes up.
Yeah, I think these what if questions can be really helpful. So another somewhat related question is, could you address insurance for collections that are being conserved off-site at a conservation studio? Whose insurance would cover sudden and accidental loss?
Definitely. I work with a ton of conservators, so I can see both sides all the time. Sometimes the conservator will offer to cover the pieces. Sometimes the museum will ask to keep the coverage under their own policy. It's really, you need to have the conversation with the conservator. You need to determine who's okay covering what, make sure that's in the contract. In regards to the actual treatment process, that would be covered under, like, if the conservator had what's called a professional liability insurance. So you can maybe ask about that. But regarding the artwork, while it's in their studio from sudden and unexpected loss, talk with them about it. Your policy can extend coverage, but just make sure it's in the contract.
Okay, our next question is, our museum is finishing up a full collections inventory, our first. Is it worth reaching out to our insurance company to possibly update or negotiate our premium?
Definitely, definitely. So we recommend, especially to other clients, appraisals every 3 to 5 years. I know that's not really realistic with museums, but it is important to keep updated records. So especially if this is a current inventory, yes, please reach out to your broker, review the policy limits. Let's just make sure that the limits are still adequate.
And congratulations, Madeline. That is an immense amount of work. All right, our next question is, we installed a sprinkler system in the museum. I assume that any damage caused if it goes off is covered as water damage?
Yep, so that's not explicitly excluded under the policy, so that will be covered. Maybe I should mention that if we start going over limits of 250,000, underwriters do require central station fire and burglar alarms. So they have to be monitored by a central monitoring company. But for the sprinklers, yes, that's covered. It's not excluded in the policy.
And sprinkler systems are not required by underwriters. I mean, obviously, a lot of historic buildings don't have sprinkler systems. All the more reason to get some more fire extinguishers peppered around the facility, right? We've definitely seen some losses over the years of sprinkler systems gone wrong, particularly when there's pipe corrosion, and that can be a big problem. One thing that is great as technology advances, water sensor capabilities and accessibility has improved a lot over the years. And so, that's a great tool to have, particularly in storage that perhaps don't have line sight on all the time, every day. Put a water bug there, have it connected to whatever, your system, so that you get an alert if there's a water, situation. Really, to the extent you can.
Linked to one of the questions we had earlier, what if a frame business causes damage?
The same conversation you want to have with them. Keep in mind who has care, custody, and control if the framer's taking it in. Maybe talk to them to see if they'll cover the item. It's not an exclusion on the policy, so it would be covered. And I think same with conservators, they may charge you to use their insurance. So just another reason why you might want to keep it under this policy. But again, have that conversation, make sure it's documented, and it just explicitly says whose insurance is kicking in.
Okay. Do we have any more questions? Okay, if not, I will turn it over to Erica.
Well, thank you so much to Adrienne and Carli for such a great presentation. I've been furiously taking notes in the background here, and I imagine many of our attendees have as well. We had lots of great questions, but I just invite our guests to, if you have more questions now, specific questions to your institution or your particular circumstances, things that occur to you in the next few days, please, we invite you to join us for the follow-up virtual Conversations with Colleagues event that will be happening on Thursday, July 10th from 12 to 1 p.m. You'll be getting a link to that virtual meeting as a follow-up from Rachel here at CCCA in the next few days. And normally, I'll just say, normally we try to have those sessions pretty close in timing following the webinar itself, but because of the July 4th holiday, it's a little bit further off, but hopefully that gives our guests more time to collect their thoughts and bring more questions to the table. And I just see a follow-up question in the chat about the recording for today's event. Yes, that will be shared with you all, as well as more broadly everyone who registered. Perhaps there were some folks who registered who weren't able to attend after all. Definitely that recording will come out in the next few days, the link to that recording. And then as well, we have a practice in general of releasing recordings as public links on our YouTube channel after about 6 months have passed. So this program will be available more broadly after that 6-month window. So again, thank you so much to Carli and Adrienne. It was wonderful to have you with us today. So appreciate so much your insights into insurance, and looking forward to continuing the conversation with you on July 10th.
And Erica, one last point for everybody. The webinars are recorded, but the conversations with colleagues are not recorded. So please, if you have a chance to attend, that's the opportunity that you'll have. Thank you. And thank you again, Carli and Adrienne.
Yeah, of course. Thank you guys.
Thanks, everyone.